I have grown my 401k to over $100,000 by the age of 29. I did not do that randomly, or I did not do that by luck. I did that by putting in the hard work and sacrificing in certain areas, because I did the simple things and I did it over a long time. Now, if you want to learn how to supercharge your 401k just like I did, you want to stick around for this video, because I have 7 things that you can do to supercharge your 401k. Now, a lot of people aren't big on 401ks because it keeps you at your job, or it might leave you strapped at your job or relying on your job to build wealth. But I'm a huge advocate for a 401k, especially for someone that doesn't know much about investing or doesn't know much about finances. Having a 401k is perfect because the money is pulled out of your paycheck automatically and invested into the funds that you choose to be invested into. The first thing you want to do to supercharge your 401k is to take that employer match. Now, a lot of times when you go to a job, they'll give you an employer match, and this match generally says if you contribute 5% to your 401k, then we'll contribute 5%. Or if you contribute 8% to your 401k, then we'll contribute 5% or 3%. It's free money just by you contributing enough money to get that match. Too many people leave thousands of dollars on the table because they hear you should not invest to your 401k, invest into this. Or a lot of people just don't even sign up for the 401k or have no idea what it's even about. But you're leaving free money on the table if you're not investing into your 401k, especially if you have a match. If your company offers you a match at 5%, if you invest 5%, that'll be 10% of your money being invested into the stock market or being invested to whatever fund you end up picking. It's absolute steal. So say I invest 15% of my money. Because I invest at least 5%, I get a 5% match. So in total, I'm really investing 20%, but 5% of that is actually free money. It's a great deal. If you really don't believe in 401k, then at least get your match, because like I said, it's free money and you just can't turn down free money. The second thing you're gonna wanna do to supercharge your 401k, and this is something that I try to do every single year, is to increase your contributions yearly. So you can increase that by the dollar or by the percentage. Now, if you increase it by the percentage, you're gonna more than likely see these little increases. You'll be surprised how much 1% is of your income. Let's say you make $60,000, right? Say you contribute 8%, 0.08. That is $4,800. Divide that by 26. That's $184 that you need to contribute each check. Say you get a raise. You increase your contributions by 1%. $6,000 times 0.09. $5,400 divided by 26. $207. A 1% difference from 8% to 9% is $23 a paycheck. That's nothing in the grand scheme of things, especially if you got a pay raise. So every year you want to try to contribute more. Every year you want to try to contribute more, especially if you're a 401k person like I am. You want to try to contribute as much money as possible. And before, I was doing $50 increases. And that was more than the 1%, 2%. I want to go by percentages. I would not really go by the dollar amount. Just try to increase your contributions by 1% every single year, and then fight for those raises. Make sure your job pays you what you think you should be paid, and if it doesn't, then go search for another job or go get a second job and contribute more to that 401k from the first job and kind of live your lifestyle with that second job. These small increases will make a big difference over time, and if you continue to raise your income and increase your contributions, you'll be maxing out your 401k before you know it. Number 3, and this one is very important because there's been people at my job or people that I've talked to that have ran into this problem, and it's to make sure that you're actually invested. With my 401k, when you first open your 401k, it opens as soon as you start the job. They put you in a fund that is almost just like a normal savings account. So you're maybe gaining 1 or 2%, maybe even 3% a year. They don't automatically put your money in that fund that's tracking the S&P 500. They're not automatically putting your money in that fund that is tracking the international stocks. Your money is automatically put into a low growth fund that you can't lose and you really won't gain much. I even know somebody, he had mentioned he was in this fund, basically a savings account, contributing money. I'm not sure how much he was contributing, but for 10 years he was contributing money to this low growth fund because no one ever told him to change and get out of this fund. And I was doing this too. For a good first year, I was probably in this fund and I had no idea until someone told me, and I'm glad someone told me sooner than later, because who knows if I still be in that fund. My financial education has definitely grown since I first started working, so I don't think I still be in that fund, but you want to make sure that you're invested into something that grows. Look for a fund that closely tracks the S&P 500. Some 401ks are through Fidelity, some are through Vanguard. You want something that's giving you a return of about 8%, 7% to 10%. That is perfectly fine for your 401ks. I would honestly stay out of a target date fund as well, because it's just not going to grow as much, especially as you get closer to your retirement. If you're young, just get into the S&P. because you really can't beat it. It's top 500 companies in the US. Everyone's investing in this. So it's within the best interest of the S&P 500 and the funds that track that to go up. At the end of the day, it's personal finances and it's personal to you. So make sure that your investments match your long-term goals. If your long-term goal is to be less risky as you get close to retirement, then invest in target date funds. This is just not my cup of tea. The fourth thing you want to do is to stay invested during downturns in the market. This is very important, especially if you're young. We have a long time to invest our money. So there's no need for us to contribute a less amount of money because the market is on a downturn. If you contribute more money on a downturn, you're actually buying stocks or buying the fund at a cheaper rate. And then when the market inevitably goes up, your money might 1x or 2x or 3x depending how crazy the market is going. 401ks, they're not as easy to pull out, so I'm not saying don't pull your money out, because at the end of the day you can do a 401k loan or something, but you can't really pull your money out of 401k like you can of a brokerage account or even a Roth IRA. It's a lot more difficult and more hoops and loops you gotta jump through to pull out money for your 401k. If anything, you want to increase your contributions, especially if you're investing into something that matches the S&P 500, because we know the S&P 500 is ultimately gonna go to the right and up, or just keep it consistent. That's what I do. I keep my contributions consistent. I've been keeping it consistent at that 15, 16, 17, 18% for the last 2 years. I'm gonna continue to do that and raise my contribution slowly. I'm not gonna be raising every single year. I'm probably gonna raise every 2 years. Depends on the raise too. If we get a raise, then I might raise it. If we don't, then I won't. If you wanna really supercharge your 401k, then you want to make sure that you stay in the market, especially during these downturns. And the fifth thing you want to stop doing if you want to supercharge your 401k is stop trying to time the market. I mean, again, with a 401k, it's hard to take your money out, but you can't change the amount of money that you contribute to your 401k on a monthly or a bi-weekly basis. We don't want to be like, all right, I'm gonna time the market. So this week, I'm gonna put $300. Then next week, I'm gonna change my contribution rate to $700 because I hear that Tesla's gonna drop something, or I hear that Apple's gonna drop something. Those companies are in the S&P 500 and they might boost the entire stock market. No, we wanna continue to consistently, steadily invest our money at a constant rate. So we're doing $700, then we're doing $700 for the whole month or for the whole year. If we're doing $500, then we're just gonna continue to do $500 for the whole year. We're not just gonna keep switching our contributions and try to time the market. It's nothing we wanna play with. I mean, your 401k, if it's matching the S&P, it should be giving you a 7 to 10% rate of return no matter what. This is not your buy and sell account. We're just buying, and then when we're ready to retire, we're going to actually pull the money from this account and sell what we have and live off of that. You know, I truly believe that the people who build most of the wealth aren't over here making these changes and pulling money out and trying to time the market. Like, it's a slow, steady race, and you just have to keep contributing, and before you know it, compound interest is going to work in your favor. And once you get over that 100K, maybe even 150, you're going to see your money grow, but it's going to take a while, especially starting out. Especially if you're on a low income, you can only contribute by so much dollars. It's going to start slow. I promise you, over a long period of time, your accounts will grow. And the sixth thing you want to do is to keep your fees low. 401ks do have expense ratios, which can be a lot higher than, say, investing to FXIX or VOO, but you want to try to keep these fees as low as possible, because this is money that will be taken off the top of your money that you invest to your 401k. So you want to kind of keep these fees as low as possible. If you can't, then you can't. You just got to kind of do what you got to do. And even with the higher fees, I still support a 401k because it's just easy to invest in. It's just automatic. And if your 401k offers good funds to invest into, then I don't see why you shouldn't. It's pre-tax dollars. I know some people are like bigger into the Roth 401ks. I'm just a 401k guy because it works for my particular situation. I wouldn't put too much thought into this one if you want to supercharge your 401k, but it is something to think about. And the seventh thing you want to do is to let time do the heavy lifting. We're investing for 10, 20, 30, maybe even 40 years. So we're just gonna let time do the heavy lifting, and we're gonna continue to contribute consistently every single paycheck or every single month, and we're gonna watch our accounts grow. I think it was like a year ago, my account was at $70,000 or $60,000. And then a year or two later, I'm over $100,000, and it's just continuing to grow every single day. Now, yes, we have those bad days where it's just kind of staying constant, or it might go down, but at the end of the day, it's gonna go up and to the right. And the earlier you start, the better. You wanna get invested as soon as you get that first job, and just continue to invest a solid amount of money every single month. And as you earn more money, you want to raise your investment. So trust me, time will do most of the heavy lifting if you're investing correctly. So at the end of the day, growing your 401k isn't about getting lucky. It's about getting your employer match, making sure you're invested into the right funds, increasing your contributions year over year, and staying in the market even during downturns, and all the other things that I listed today. If you can follow these rules and these steps, then I promise you that you can supercharge your 401k just like I did. If you're only doing the math, then you're not going to see as much growth as you will if you were to invest more money into your 401k. So be sure that if you invest more money into your 401k, then it is the account for you. There's a lot of places that you can put your money. You can put it into brokerage accounts, put it into Roth IRAs, you could put it into real estate. The main thing that I want to do with my money is my 401k. This is what I did and some things that I'm doing right now to continue to raise my 401k. And honestly, it's not even stuff that I have to manage. It's just something that automatically happens because everything's automatic with 401k. Your contributions are automatic. The fund you want your money to be contributed to is automatic. So there's really nothing for me to do but to watch my wealth grow month after month and year after year. Also, I have a link to my investment calculator in the description below. Check it out. Add it to your home screen. It literally works and functions as an app if you add it to your home screen, especially if you have an iPhone. So hopefully you guys enjoyed the video. If you did, leave a like, subscribe to my channel, and I'll see you guys in the next video.